Hey guys, welcome to another edition of Crypto Lab with Alex, featured by Trading Analysis. As usual, we're going to go over the macro scene, which has been extremely important in the current environment. And we will look at a couple of scenarios as well, since when these geopolitical things are in question, we don't have I think a very bright visibility how the things will unfold. They can go to one extreme to the other. In regards of the central banks, we just had the ECB, which has been kind of a sit and wait. They have increased a little bit assets purchases for the next 3 months, in line with current developments, but inflation goes higher, and they are actually looking inflation to be anchored at 2% at 2024. Wait and see. It's a relatively good stance, I think, in this moment, but I don't think the central banks are going to be able to pursue this higher inflation. Maybe a little bit more in US than in Europe, because the Europe will be burdened by higher energy cost and all other costs in regards of commodities, at least in a foreseeable future. Fed is next week. I think it's going to be also very important, but I think Jerome Powell on the congressional hearing was pretty much clear. They're gonna raise rates for 0.25 basis points. But I think they will talk down a little bit their hawkish stance towards the end of 2022. We just had the latest figures in regards of inflation and also jobless claims, which has been going down, and inflation going up. It's going to be what the central banks are going to do. But as I look how they actually posture and how their narrative is currently, I think they will all be in a sit and wait mode. What will happen globally, and they will take it for there. So let's look a couple of charts on the macro scene. Of course, there are a couple of scenarios I'm looking. Also, we are going to switch to cryptos, of course, afterwards. This is a mainly crypto show, but we add a little bit of macro because I think there is an interlink still between the liquidity and um, kind of fluctuating correlation which Bitcoin has, a little bit with dollar, a little bit with indices, but these correlations are not so fixed. I did some measurements and calculations in regards of correlation between the stock market and dollar, and they are really dispersed. It is not an inverse correlation that you can count on. Sometimes it works very well, sometimes it doesn't. I will not rely that as a most kind of a follow through for any trading decision, and actually count on that correlation. Let's start with the 10-year yields chart. So let me glare the charts, and we are seeing the move up. Inflation data was higher. I'm still going to pursue this wave count. We are in potential divergence and a fifth wave. I know this might sound strange, but I think this chart will solely depend what the Fed is going to do next week. So I don't like to change this wave count to be more bullish until I see the stance of the Federal Reserve. So I'm still going to look for either here a fifth wave. This is just some type of a correction. As we go on a daily chart, you can make a case. You have some type of a leading diagonal. This can be some sharp ABC pullback, and then we reverse. So I'm not going to change this one, either this being a wave 4 or a wave 4 triangle. It really doesn't matter. The question is what we are going to do in this range. So we fell nicely down to 1.6, 1.7, and we are moving now up at 1.98. So as long as we stay with this level, and kind of resist a further upside, I'm still okay to holding this wave count, which shows that potentially not due to additional inflation, which we are going to definitely see because energy prices are still has to be calculated for the last couple of weeks, but simply because of the stance of the central bank next week. Okay, so I don't think they're going to pursue rates immediately on the higher end. In the Europe situation has been pretty much volatile in all sorts of things because the Europe is the one who is pretty much exposed to all of the latest event between Russia and Ukraine. And the price is currently falling down. We have been climbed in the last week up to 171. So this is a price chart. Yields are inverse, and I use this just because of the clarity on the wave count. I still think we are in some type of a wave 4, so I don't think this is something directional to the downside yet, because Europe will stay in a relatively big disparity between prices going up and central and also peripheral countries' troubles to generate further growth due to these higher prices. So I think central bank will probably stay more accommodative than in United States, and I will still look for some I will not say deflationary, but geopolitical taming of a yields potentially to some levels for some times ahead, which will actually depict this to be correction and further move on the upside in this fifth wave. As long as this support zone holds, this doesn't look impulsively. You can also introduce another triangle here, this being a first complex wave and an ABC x ABC, and we start grinding higher. So we will see how this will unfold, but I'm not ready to consider this to be bullish on the upside yet. So this has been my stance for already year and a half, looking this chart, and it is still just trading in a range with a little bit downward momentum because inflation obviously is moving higher. So market is maybe trying to price in some of the yields in Europe going higher, but as you can see, it doesn't go so well. As we are trading for a high, there is a big oscillation. And I'm going to track this for us and for you, of course, having this hypothesis that this will be just a fourth wave correction in some form, and that we are going to go higher. Okay, so let's switch to dollar index. Dollar index has been moving up. We can change this as a ending diagonal. Maybe if this goes down and then climbs up, we can bring it back, but it really doesn't matter. Since we are holding this level, so we have to be very careful with the dollar index because dollar is still a reserve currency, and lots of debt is accumulated outside of the US in the dollar terms. Nobody wants higher dollar, and of course dollar is still a risk off currency and a type of a safe haven. So any push above these levels or a small pullback and then a continuation on the upside will actually produce some type of a triangle. I'm introducing this just because of the current times. If we are actually now without this war that has been going on, I will gladly stay with this wave count, and I'm still staying with it. But as we experienced before, in the COVID crisis, Fed was very ample to react and stop the dollar moving on the upside by extending the swap lines to the foreign banks and actually ease off the offshore liquidity for dollars. If the dollar starts moving higher or correct a little bit and continue higher, I think the Fed is going to do the same. US and rest of the world do not need a stronger dollar in this situation. So I'm gonna observe this both wave counts in dollar index currently, just because of the current geopolitical. If this fades out and we reach some agreement very soon, the war stops, and then we are in a new Cold War kind of a stance for the next 5 to 10 years. I think this chart will have a much better chances to unfold with the dollar lower, but also we have to take it into account that if the Fed starts to raise rates higher and economy does not balance itself very soon, they will also facing the same problem. They will be late to catching up with inflation. So they might even do a yield curve control. So I'm not throwing that on a table yet, but I'm just kind of give you a small warning that in the current geopolitical events, dollar still plays a big role so far, and this might turn ugly also on the upside if this starts to be a prolonged affair. But I'm going to stay with the favorite wave count, which I've presented for a long time, and 5 waves down below these levels will actually keep this wave count to survive. So let's look gold and silver. So I'm not so fascinated to tell you guys by the move in gold. Gold has moved to these resistance levels around 2,600, 2,069. So previous highs, like I don't like to say a double top. I never do say that. But just a strong resistance levels, and it's moving down currently. So I want to still stay and see what is going on. I'm also switching between these two wave counts. Why? Because I mean, I've been on markets like 20 years, even more, even 25 years, like 20 actively working for some big banks in Treasury and also in brokerage houses and many other places. So um, gold should be already around, I don't know, 2.5, 3,000. I said that last week, and we got only what we got from the last week, kind of a $200 move on the upside. I mean, I don't know, but in my view, this is a very small push on gold, taking in consideration the current environment, the nuclear threat. Obviously, there has been something strange going on in the gold market. I have some theories, but I will not expose them here publicly. But I will just say it's very suspicious and very strange that gold is not trading around at least 2,500 now. So we have a price backing off from this previous all-time high, which is a kind of natural, but um, don't stick yourself with this market for further continuing on the upside. We need to see some proof. This, I mean, on the bullish side, might have a 1-2-1-2 and then expansion, but I want to see these highs taken out. So I'm still kind of indecisive just because of the fact that we are not trading at 2.5, 3,000 already, which will be the case 10 years ago, for example. So let's look silver, and I will show you a gold silver chart. So silver has been also very quiet. I mean, this move up from 23 to 27 is not something spectacular. In this situation, we are still trading around this channel, a little bit above. We are backing off the highs now. I'm also looking a couple of scenarios. There is, of course, a bullish one, which depicts this as some type of a flat, and we go up. I have also this one, which will suggest maybe a complex correction and testing back this 1920 again, and then going up. So I'm not so sure about these two currently, to tell you honestly. Somebody will maybe think that I'm a little bit cuckoo on that. Everybody is vouching for gold and silver, but if you look the charts, I mean, nothing spectacular has been going on, and we are already in maybe a couple of weeks um, of the last potentially solution to this war. It's not gonna take forever. So I mean, I'm just kind of want to point out that in some older times, these two will be much higher in this type of crisis that they are now. So I'm going to show you gold silver ratio, which is very interesting. So if you look these two charts, you will see actually that while gold was sideways, silver was moving sharply on the upside. So if we put these two charts, and if you look this move up in silver and move down in gold silver ratio, you will see obviously because the gold was moving sideways and silver was pretty directional, you're going to see 5 waves down in this gold silver ratio. And currently you are seeing actually gold performing better, which is, I think, understandable. And it's going to perform a little bit better for some time. And after the silver might take again a stance for the downside. I don't see any flats here. I mean, you can consider this a flat and say this is over, but I will not go with that currently. We can also make a case this is a 1, 2, up in 3, 4, and big wave 5. So I think more appropriate will be that gold is going to outperform silver for some time, and then silver will take the torch back, and actually it will make this gold silver ratio will make another 5 waves down, which will push silver relatively substantially higher towards our target, but I don't think it's ready yet. Okay. That will be from the macro side. I think most of central banks and relatively big traders will be out of the market. This is very uncertain environment. We can deal with the economy, but with war, it's difficult to predict what can happen. So approach this market carefully, and if you trade, manage your risk. That is definitely necessary, whatever assets classes you trade. So let's switch to cryptos and let's look total crypto market cap. One of the charts we have tracking for already a year or two as the very important one. So let me just englare this. I have said many times, and I will repeat once more. We are looking for a continuation up. We are considering this just to be a pause before a move on the upside. We do noticed a couple of times that market blinded by sentiment was trying to move market on the upside, but where we actually stated that the crypto winter is starting, market was 99.9% bullish. Of course, we moved lower. That same narrative was pushed again in November 2021, and we failed again. So we can recognize a couple of forms. For now, triangle is doing the job. We are staying above 23.6%, which is a usual kind of a Fib ratio for a triangle consolidation. And until we break some of these key levels, I'm really not ready. We can play with this C wave, is it over or not, but I'm not ready to actually change this for a more, I would say, worst case scenario down to 1 trillion. I would like to leave that and that we follow that in a case of a breakdown. But currently, we don't really need to change this wave count. We have seen only some type of a complex correction from these B wave highs. And now we are consolidating maybe a small push and make this C wave even more complex, and then we go up in a D wave. So I'm just observing. This consolidation implies we might have a little bit more lower levels, but until we break this crucial level, I'm not ready to switch to a more, I will not say disastrous, but more lower wave count, which will actually define this as a potential flat or some type of A, B in a flat, and then ending diagonal in C down to this 1 trillion, which I have in Bitcoin. So nothing to add here, pretty much. So sideways consolidation, we are still not going anywhere, and I think Bitcoin and cryptos are holding well in regards of the situation. There is no reason actually Bitcoin should be affected in any way by this, because it's pretty much independent in regards of the central banks and fiscal and monetary politics. But in general, it is still linked to people which are trading it due to algorithms, kind of a joint liquidity, and then you have a VAR in a fund's portfolios, and if they have a Bitcoin, they'll rather sacrifice peripheries if the stock tanks than hold Bitcoin. So we have to acknowledge that there is some correlation between these two. So we can also look oil. I have some higher targets. I will not go today too much in this chart. This is the chart from 19th century. So there is a clear 5 waves up. I'm just looking what this is going to be a big wave 4 in some type of a triangle or a flat, or we are going to go directionally above 200. And I have shown some of the wave counts, which has been actually showing the target we almost hit at around 137 in a possible flat. But in this situation, you have to count also that this might go directionally up with small correction, since we have an embargo starting yesterday from US towards the Russian gas and oil. So it's also a sit and wait situation. Okay, so let's finally switch to cryptos. I'm going to show you a Bitcoin chart. So as you know, our stance is still holding. I'm not changing it. I don't like to change these outlooks very much. So and there is no reason for it. Okay, so there is a wave 1 down in 2. I do count this as a triangle. Maybe a little bit complex solution here with a WX, and then we have a down in A, up in B, and C wave actually might be a diagonal C wave, and my support levels are from 29 to 32K. Okay, triangle wave count will be invalidated if we go below 28,800, and then we have to go for a flat towards 22K. So I'm still not seeing that. This has not been so impulsive wave structure. We can also transform this in a big ending diagonal. That's true. But I kind of filter out all of that noise and present to my members in trading analysis and to you one of the filtered scenario I think it's going on. Okay, so I'm still gonna stay with this triangle development until we break key levels, and also the same thing with Ether. Okay, so I don't see a little bit different wave structure, but still a triangle. Move lower will be relatively bad for Ether, because if we break triangle wave count, we have to take into account some levels from 1000 to 1200. There is no reason to go there. I don't want to sound kind of a spectacular, you know, I'm not that type of guy. So I'm just plainly gonna say to you, I still think we are in triangle with a little bit more downside, and then I think we're gonna go from there to look for the signs for the D wave on the upside. Fourth wave still consolidating. We are still within time limits where the wave 2 is actually in line with the wave 4. Our triangle wave count was introduced already as a possibility in March 2021, where the market was pretty bullish, so no need to change it really. Yeah, so that will be a basic presentation of what I see on the current markets developments. So let me go to your questions, and maybe we can look some of the cryptos you like. So Elena, hello Elena, thank you, good day to you. Amit, hi Alex, good day, hope you are healthy. Yeah, I'm healthy and safe. Currently we are okay. Felix, current wave 2 in broad commodities, possibly. Yeah, we will see. Hi Alex, can you please take a look at gold and silver? I think I've been very vocal on gold and silver, and you have seen gold and silver ratio as well. IVAO, pozdrav, on Serbian, XFIN, XDC, please. Alex, would you please look in Theta and Rune? Sebastian, hi Alex, in terms of timing, I was wondering how Bennett's S&P count squared up to your BTC count. Well, I mean, if the stocks go lower, but there is a potential Bitcoin will stay in triangle, okay? Because uh, uh, you have a certain wallets. If you go and look the internal analysis on a chain, um, you can see that there is a pretty big support at 30K. There is a lot of big holders there and below. So not necessarily Bitcoin has to cross below these invalidation levels if the longer term players, which holds a considerable amount, do not sell. I mean, all of these plays that you see here, it's basically retail, you know, very short term holders. So longer term holders are positioned pretty much around these lines down there, and they are still holding, they're not selling. So I guess not necessarily we are going to see these big holders actually giving away their Bitcoin. And also we had a nice news from United States. Actually, Biden administration will look into digital assets and try to regulate them and put them into a kind of a proper form, which is a very good stance, and it's positive for crypto. So okay, Rune again, Matic, Schnitzel, Desi Schnitzel, Steinman. Okay, I don't know about lagging. I hope it's okay now. So let's look a couple of the cryptos for you. Let me go and just take my Binance feed because it's much more better for the shorter term. This is some of the crypto compare data, which has a kind of a long history, and that's why I like them. But on a shorter term, I use Binance for this data in the multi-wave, which is one of the tools that makes our job very easy. Yeah, one of the things we have shown to our members has been a wave count on Luna. That was pretty, I will not say easy, that will not be very humble of me, but I will say it was very visible. That these developments in Luna, we have published that in our member room, that Luna actually on this chart is completing third wave, moved down in a fourth wave and a fifth wave up, which actually has been, as you can see, unfolding. So this is the picture before, this is after, pretty much nicely on the upside. We are already backing off from these higher targets. So there is sometimes some wave counts which are pretty visible. So let me go and see some of the charts for you as well. I see that Rune is very possible, or Torchain. I think we have a wave count on that. Let me just see. What's up with this? How are you guys? Nobody's saying anything. You just ask for charts. Torchain dollar. Yeah, I'm still gonna stay. I mean, it's behaving pretty nicely so far. As you can see, we didn't cross any of these levels, key levels that I'm looking, which I have notified that if we cross them, we might go lower. So we are still within potential ABC or a triangle, and it's doing nicely. So my key levels will be at 2.97. So watch this consolidation, but it still looks like we are just kind of a consolidating here. Potentially a small push to the downside is possible, but this will be a key level. And to maintain this outlook, I don't want to see this key level actually broken, okay? If you see this longer term wave count. Let me look HDC, probably interesting one. So this is the one I never looked. As you can see, I don't have anything on it. Yeah, I think this one is in a fourth wave. Usually this type of things are disregarded. So especially, I don't know if this was what happened with this feed, but anyhow, the picture is relatively, I think, visible. So we might be some type in a complex wave 4 with a resolution on the upside. So if you count the intermediary move on the upside, you can clearly define 5 waves. And here you have a reason to look that actually this is just a corrective. Okay, so if we measure this first 5 wave in a potential wave A or W, equality comes around 0.033. Okay, so potentially a little bit more downside, and I think we are in the fourth wave before we continue higher. So watch these levels, of course. So if you want to manage your risk properly, you will allow this chart actually to make a first impulsive move on the upside, and I want to remove this. Just sorry guys, and then you want to have some confirmation in 5 waves for a potential pullback. Also, break of this channel will definitely be welcome on the upside, and then you can manage your risk pretty nicely for this potential move on the upside. So basically what you're doing here, you're just buying a probability of this wave count with a very small risk, and that's how we like to do it at Trading Analysis. Theta, yeah, I've been very vocal on Theta. I don't know if you have watched the previous streams. So Theta is one of the things that I'm looking for a reversal on the upside. I have a very clear, in my terms, very clear outlook currently on Theta. So Theta is some type of a corrective move. So I do count this as a 1-2. So this low here is not viable. I have checked. So I'm counting this as a 1-2 up in 3. And I think this looks pretty corrective. Nothing impulsive here. I mean, this was a leading diagonal and then a triangle and then also some type of an expanding ending diagonal. So I think this is just an ABC with a very complex wave structure. So wave A up in B in triangle. And if you look some measurements, the lows might be around 1.705. Okay, so this is equality levels. You have also 38% retracement. You also have a lower channel line, as you can see here. So it's a kind of a meeting place. And also, if you go on a weekly, this is just a 200 moving average there as well to kind of add, and also the RSI is very low. So, I mean, in my book, even you can wait a small confirmation on a smaller time frames, but this will be, I think, a very solid rock, level for Theta to actually start and moving on the upside. And some of these charts kind of gives you a clue sometimes what can happen also on Bitcoin and other. So I always go and look vice versa. So as you can see, 200 moving average, you cannot see it here. I will cancel this one with 9, but 200 is actually this blue one. I can englare the picture so you can see it. So there is a couple of things actually combining itself between these two levels around 2.2, 2.02 and 1.653. Okay, so this is something which I think it's going to be a focus point for me in Theta. Okay, guys. So yeah, Matic still in consolidation. So I've been bullish on Matic since ages. I do consider this to be just a consolidation, and then further continuation on the upside. It really doesn't matter how you count this. People are paying too much attention on what is the wave count. Is this that? I get so many things on that on my Twitter feed. Everybody wants to catch the lows, you know, and be smart. But that's not how the things are done. on the over longer term. If this is a triangle or a ABC and this is diagonal, or it's a when you come in these last stages of potential correction, you just need to look at major support resistance levels and smaller 5 waves on the upside. I think that's enough. Who will remember if this starts to move on the upside, what this was before? Nobody, you know. Everybody wants to catch a move. If this is an ABC, in flat or it's a triangle, it's really relevant. It's just relevant from the point of entry, but it's not something that we should make a fuss about. We should observe it and let it develop and look for signs. So pattern morphs, they're not fixed. But still Matic is bullish, okay? So I see this third wave on the upside still an intermediary level, still pretty nice chart for now from the last high. We have been trading pretty much sideways, and here you have also a base channel, which is a nice kind of thing to have because it gives you some support levels as well in Matic. Okay. So yeah, guys, let's do one more, and that's it. Let me just look a couple of comments. How do you see euro dollar? Yeah, macro is not that strong. We will see. We can go down below parity. The ECB was, I was expecting a little bit less optimistic, to tell you honestly, but I think they're in a sit and wait mode. So I usually I don't touch something that it's not clear. So it's best to wait a little bit that some of the dust settles. Kyle Banta. Hello, Kyle Banta. Z. Dollar ruble. I didn't look. I just peeked a couple of times. It must be an interesting chart. Definitely to look. Let's reverse it. Let's do a ruble dollar if we have it on a trading view. Let's see. Oh my lord. Let's see how this looks. Where this started from 1977. Oh my god. Yeah, so I have to go on a higher time frame just to see what's going on here. Well, I mean, this does not look so. I will have to work a little bit on this chart, but just from the first look, if this is a first wave, a long first wave on the downside, and now you have some type of a 5-wave move, so I guess potentially we might see this as a because the wave 1 was pretty long, and you have now not maybe finished, but maybe a little bit more down. I cannot see that. I will have to go a little bit deeper on a smaller time frame. But anyhow, potentially something like this for the next couple of years, year or two, and then maybe we can continue higher. Okay, so it does look still, if you look at it from this perspective, as unfinished. I will not put wave 3 here. It will be really too small, and some of the wave 4 and wave 2 would not correspond. So most likely this will be unfinished wave 3, a little bit more downside, some type of a triangle, sideways consolidation, or a directional pullback when this thing is over. But then we might creep down a little bit because Russia will also be in trouble economically for some time. They did prepared, but also this is not going to be a nice situation either for EU or from Russia from that respect. Okay, guys, so let's close it. Thank you for being with us. Next week also Crypto Lab with Alex. I do monitor things also with our members, so If you like to become or test us, you can join us at tradinganalysis.com. I was also thinking to, I tried to invite some guests as I promised. Nobody answered. They didn't see the message. So sometimes I do try to contact these guys, which maybe can bring some value, and also they're very educational from several aspects. But trying to contact them over Twitter is kind of a difficult thing. So I will keep trying. What can I do? And yeah, so in that respect, we are going to monitor situation. For now, as I said, cryptos, as you can see, some of these charts in Theta, in Matic, in Binance Coin, they are suggesting we are potentially close. We can still not claim that, but I do think we are possibly very soon maybe ready to show some impulsive move on the upside in the couple of weeks or week or two. So we will see. And you can, as I said, visit us at tradinganalysis.com. I don't know, can I do Borat? Sign up, please. How he's doing? I have to learn this imitation of Borat. That will be a really good for this last part, which I hate. Subscribe and like button, and see you next week, guys. Trade well, be safe, and observe. I mean, this is just a horrible show that you and I didn't ask for, and even our popcorns are going to get more expensive, you know, and terrible things, global geopolitics. So what can we do? Best thing is to kind of be composed and just observe this mess. What can you do more? And see you next week, guys. Bye bye.